Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 large cap stocks that have unanimous strong buy ratings. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 large cap companies that have nothing but buy ratings from Wall Street analysts. We're going to take a look at these companies, what it is that they do, and how bullish those analysts are feeling about the stock's future. Now we found today's stocks using the TipRanks stock screener. Found on the TipRanks website under Research Tools, I set my filters to a strong buy consensus from all and top analysts. I wanted them to trade on the major exchanges and have at least a neutral or outperform rating on the TipRanks Smart Score. Of course, we set our market cap to large and above, and I got my list of companies down below. The first stock we're taking a closer look at today is T-Mobile. Their stock trades under the ticker TMUS, currently priced at $147 per share. Now, they did cool off here going into the summer and overall are down slightly in the past year, but have been climbing back up here recently, gaining over 8% in the last 3 months. They do also score a 10 out of 10 on the TipRanks Smart Score. T-Mobile is a well-known telecom giant with a big presence in the wireless space. They are America's largest 5G network, covering more people and places than anyone else, and their 4G network connects 99% of Americans. The company also provides a host of other services, including voice, text messaging, video calling, and data communications. The T-Mobile stock has been gaining momentum since they shared their Q3 report on October 26th, where the company showed their highest cash flow in company history. For their third quarter, they reported revenues of $19.25 billion, and earnings per share came in at $1.82, 12 cents ahead of analyst estimates. They saw best in industry numbers for their postpaid net account additions and postpaid net customer additions, and with this, they raised their future guidance once again. Their CEO commented that, "I've said it before and I'll say it again. In this competitive environment, only T-Mobile can deliver the type of stellar results we saw in Q3 because only we can consistently deliver the best network and best value combination that customers want." Following this Q3 report, we've seen plenty of analysts reiterating their price targets, one of those being a 5-star analyst from RBC Capital who ranks in the top 1%. They increased their price target on the T-Mobile stock, citing their inline consolidated revenue and better than expected core adjusted EBITDA and free cash flow. They said there are solid trends in postpaid phone net adds and ARPA growth. Of course, no surprise that the T-Mobile stock does come in as a strong buy with 15 unanimous buy ratings. The average price target comes in at $184, which would be a growth potential of 25% from current prices. Down below, we can see our most recent price targets coming in, many following that last earnings report, including RBC, who has an upside of 14%, another 5-star analyst at Tigris gives it an upside of 38%, and a high-end upside of 40%. Not many drastic low-end price targets here. The lowest is 15% upside. Our second strong buy stock is S&P Global. Their stock trades under the ticker SPGI and is priced at $387 per share. They have seen overall growth of 22% in this past year, and if we look recently, we can see another jump up here near the end of October. They score a 7 out of 10 on the TipRanks Smart Score. Now, this is not to be confused with investing in popular indexes like the S&P 500. This is actually the company behind those indexes. S&P Global's primary areas of business are financial information and analytics. They are the parent company of different ventures such as the S&P Global Ratings and S&P Global Market Intelligence. They are a world-leading provider of financial information services, and on top of data and analytics, also focus on enterprise technology and expertise in advisory services. As you may have guessed, that upward movement in their stock price was due to their most recent earnings report, where not only they came out with an earnings beat, but they saw revenue growth accelerate in every division. For their third quarter, they reported revenue of $3.08 billion, and their earnings per share came in at $3.21. The company saw revenue increase 8% year over year, and their diluted earnings per share increased 27%. They raised their guidance for both their diluted earnings and adjusted diluted earnings to reflect better than expected performance year to date. Their president and CEO said that they were very pleased with the results this quarter and look forward to a strong finish to 2023. One analyst from Robert Baird recently weighed in on the stock when they reiterated their buy rating. They noted that the company's performance in the most recent quarter and the guidance provided were impressive, characterized by widespread growth drivers, effective expense management, and ongoing repurchases that contribute to a positive earnings per share growth and outlook. They also highlighted the attractive valuation of S&P Global, considering its adjusted earnings per share and solid balance sheet. They are one of 14 analysts that all come in with a buy rating on the stock. And the average price target comes in at $441, which would be an upside potential of 13.7%. Down below, we can see a lot of those recent ratings coming in the past couple of weeks. On the low end, we do have a buy rating with an upside of 4% and a high-end upside of nearly 19%. And third on our list today, we're looking at Linde. Their stock scores an 8 out of 10 on the TipRanks Smart Score, trading under the ticker LIN. They're currently priced at $389, having seen growth of 25% in this past year. And this is another one that has taken a jump up here at the end of October. Linde is an industrial gas company that has recently been investing in clean hydrogen. The firm operates with a global footprint and has become the leading provider of atmospheric gases for industrial use, as well as other pure gases such as hydrogen, carbon monoxide, ammonia, and methanol. When it comes to hydrogen, they have the experience and expertise to rapidly generate the gas in large quantities, store it safely, and ship it where and when it's needed. They already provide hydrogen for several industrial applications, including aviation and heavy industry. And yes, that recent rise in stock price was due to their earnings report that came out near the end of October. They did have an earnings beat despite sales decreasing a bit year over year. Their third quarter revenue came in at $8.15 billion, while earnings per share of $3.63 was 5 cents ahead of estimates. Their sales came in at $8.2 billion, which was down 7% year over year, but the underlying sales were up 3%. With this report, the company also increased their full year 2023 adjusted earnings per share guidance, representing 14 to 15% growth. One analyst from Jefferies weighed in on the Linde stock after they reiterated their buy rating in October. They expect that the backlog for Linde will remain steady quarter over quarter and identifies merchant pricing as a significant near-term factor for the company's shares. They also point to the strategic increase in cylinder rental fees as a noteworthy signal, especially in light of a potential downturn in U.S. CRE. Altogether, the Linde stock has 10 current analyst ratings, all coming in with a buy. Their average price target comes in at $436, which would be an upside of 12% from current prices. And down below, we have our most recent ratings. On the low end, one buy from back in the summer, actually, with an upside of just 6%. The rest all pretty much double digits beside this 8% here, with a high-end upside of over 15%. So that is a quick look at 3 large cap stocks, all coming in with unanimous strong buy ratings from Wall Street. Let me know your thoughts on these 3 companies, and if one of them catches your eye more than the other, I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just showing you what those Wall Street analysts are up to. So please make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.